Morning, everybody. It is the 9th of December. We're Signal Centre Talking Ball. I'm Joe Neighbour and joined by Steve O'Hare. Good morning, Steve.
Morning, mate. All right.
Yeah, not bad, thanks.
What's that puppy chewing?
She's just been tucked in the room. Trying to see where she is.
Oh, dear.
Come on.
Come on. He can take Ian's place this morning.
Yeah, okay. Dog's in.
Yeah. Oh, look at him. He's lovely, isn't he?
Yeah, no Ian today. He's thrown himself out of a plane. Not because his talking ball calls have been that bad, just because he's made a vow to do a skydive. So wishing him all the best of luck with that. Hopefully he's warm.
Yeah, it's going to be a bit chilly out there. But yeah, good luck with that, Ian. And thoughts with your sister as well. So.
Yeah, absolutely. Back to markets. It's all been fairly quiet on the news front, I think, due to well, a lack of real sort of market moving news. We've seen equity markets move higher. S&P closed at all-time highs. So did the Nasdaq, I believe. Goldman Sachs reckon the US equity positioning looks extremely stretched, and that's increasing the risk of a modest pullback. I think we can all safely say it's certainly due one. Whether or not it's going to come this year, I don't know. You know, typically December's a pretty good month for equity markets, so we may see that continue to roll on into the new year. We've got obviously some coronavirus news. The first vaccines were done yesterday, as we mentioned in yesterday's Talking Ball. More rollout of the vaccines. I think we've had Boris Johnson say that we need to obviously continue to follow the rules because it's not going to happen overnight. But we are obviously in the process of doing that. And that's pretty much it from the news. I think there's maybe a bit of progress on the US stimulus package as well, which is helping things. But other than that, it's been pretty quiet on the news front, I think.
Yeah. Yeah, obviously we're sort of, I think the equity markets, like you say, have, we talked about this yesterday in a lot of detail. It's this grind higher, which is, you know, just running through the FTSE. We've poked our head above and are trading now above the 61.8 quite nicely. So we're looking to continue this move. Obviously, the main caveat for that would be a complete breakdown in the Brexit talks, but I mean we're seeing a breakdown anyway, and we're still rallying. So maybe just confirmation of a breakdown would see a pullback. But I feel like the market has decided that even if we do get that, we'll sort of have the pullback and maybe kick on higher. We normally get this end of year rally. It seems to be a big just squeeze from somewhere. Funny, Goldman's are saying it's a bit overstretched. Maybe they're positioned that way.
Yeah.
Looking at my idea from yesterday, we talked about the FTSE. I was quite happy with it, thinking it would move higher. Flirted with the stop level, but 9 o'clock last night was half an hour on side or whatever. It's pushing towards that level this morning. That my target level was around about the 66.23 area, I think. So it's just flirted with that this morning, but a nice candle from 8 o'clock to 9 o'clock. That's a bullish outside candle. So this looks like it's going to continue. I'll be positive on FTSE for today. DAX looks even better. I mean that actually has hit the, I was going to say that's hit the previous swing high, coming in at 13,462.5. Yeah, we were about 5 pips short of that this morning. So again, that looks like the other side of that level. We should see stops and a sort of fast move higher. And yeah, again, it looks like we're sort of this almost flag-like pattern. This is a bullish pattern. Obviously, we have the reaction higher from the 38.2% fib retracement. We have the consolidation here, and that gets rid of the overbought components, and then we have the next push higher. So all-time highs around about, still got 450 points to go. So potential there for DAX to continue. Again, dip buying looks to be the thing to do if you're not already long of it. CAC the same. Let's see where the fib levels are in CAC. The real dominant fib levels were through the 78.6. There's a 88.6. I don't really put a lot of onus on them, but it looks like it's going to push higher. If it gets above the recent highs 56.15 area, then we could see again same sort of thing, stops flushing out and a fast move higher. Yeah, what can you say about the US? Same old, grinding higher. Can't do anything about it. Stay with it if you're long. If you're not, look to buy dips. Keep the stops tight because we are due an overcorrection, as Goldman say, but that overcorrection has been due for a long time. I'll just flick across to the commodities. Gold, daily chart. Yeah, it's nice one. Daily chart from 2 days ago. We saw this bullish outside day, so expected a positive day yesterday. We said we were looking to buy around about the 1848 to 50 area, which was the really decent support. When we broke the support, it became resistance. When it broke through resistance, it's now support again. So again, looking to buy dips around about that 1846 to 50 area and below. So that's looking positive on the daily chart. Looking at oil as well, just I'm doing a little bit of a more detailed analysis of oil this morning, and I was just looking back on these long-term charts and just sort of showing how pivotal this $41-42 area is if we go all the way back to August 1990. Obviously this doesn't take into account inflation, but you can see how we human traders react around these levels. Swing high here, that was up at 41.53. That acted as resistance again in 2003, but when we broke through that level, it acted as great support here and also acted as support in the big sell-off from the financial crisis. That was July 2008 to May 2009. Again, it acted as support, had a pip through in March 2016, and again support, and we've broken through it, and it's a nice candle. This is a monthly chart, so that's a bullish outside candle on the monthly chart. So with everything going on in the oil world, with
news today, looks like Azerbaijan cut crude output in November, which is one of the factors this morning because it's having a decent push, isn't it?
Yeah, decent push higher. We can have a look at it. Obviously, it's equity driven as well as all the oil cuts that are going on. Obviously, with oil cuts, it reduces the amount of oil available and naturally pushes the price higher. Again, it's related to dollar as well, so the dollar effect will be in there. But a nice, strong move higher over the last 5 or 6 hours. So positive on oil, and yeah, looks like it's going to challenge the previous swing highs around about 46.70. It's not far away. And then we'll see what happens above there. Again, I'd expect some stops above that level. So a quick move higher maybe when we get up there. I don't know whether it will be sustained or not. We'll wait and see. But buying dips again in that.
Okay, great. Just on the FX front, obviously normally Ian runs through these pretty comprehensively, but just a sort of quick run through and what I'm seeing this morning, starting off with the Aussie currencies, which if they're doing well, that tends to mean that people are quite happy taking risk. It's one of the risk-on currencies, and it seems to be pushing higher across the board today. This is Aussie CAD, challenging that resistance from that swing high that we had there on the 7th of December. So that's at 95.40. Looks as though it's breaking above that quite nicely now, so may see a continuation higher there. Look at Aussie Swiss, we can see a breakout of a bit of a wedge there, and a channel drawn, but that probably wasn't too good. So there we have a bit of a wedge, and we're breaking out, so continuation higher there. Aussie yen, probably the strongest of the bunch from the Aussie currencies as we continue to see yen weakness. That's broken out of a wedge and making new highs, so that's looking super strong as well. And also on Aussie dollar, continued dollar weakness is seeing Aussie dollar push to new highs today with that break above resistance from that swing high again on the 7th at 74.53. So looking pretty good across the board there. On the flip side of that, we look at euro versus Aussie. That's breaking down. Again, further confirmation of Aussie strength. Also looking at sterling, that's looking pretty robust today. That may be to do with Brexit headlines, but this is cable today, again breaking above that high, swing high from the 7th of December at 34.06. Nice bullish candle over the last hour, and you've got to think that's now going to head back up to that swing high now that we saw on the 4th of December up at 35.39. Elsewhere, sterling yen again looking quite good this morning, given yen weakness and underlying sterling strength, so that's looking pretty strong. New Zealand dollar currencies, again another risk asset. If that's moving higher, then people are taking on more risk, and we're seeing that across the board with New Zealand dollar currencies today, all of which are looking pretty strong. As you can see then, New Zealand dollar, Japanese yen, that was Ian's gun to the head call yesterday. We got stopped out in and around here, unfortunately, but it has exploded high today, so just a day out on that one, unfortunately. And a similar situation with New Zealand dollar versus the US dollar. We were buying here yesterday, stopped out here, and then the explosion higher. So unfortunate, and we still can't catch a break really on the gun to the head stuff at the moment. It's just
all about timing, isn't it?
Indeed. Moving on to that, Steve mentioned earlier that he had a trade on the FTSE. That was the only winner that we had yesterday. Just trying to open the spreadsheet, and half an hour winner, 0.58. Let's go down to the bottom. There was our 3 trades yesterday. Yeah, 0.58 for Steve, 21 ticks on the FTSE. But if anybody did take that or held on to it, then it looks like it hit target this morning.
Yeah, so just short of it, I think.
A nice winner. And as I mentioned, Ian and I were stopped out on our New Zealand dollar and New Zealand yen trades yesterday. So overall, this drawdown continues. It's been pretty severe. The markets have been grinding higher mostly in terms of risk assets, and there's not really been much volatility despite there being plenty of news, and that has impacted our gun to the head calls. But we will persist. We will continue to make calls live on the morning video, and hopefully we can turn that around and get a period of winners under our belt. Steve, have you had a chance to find something that you like this morning?
Yeah, I'm going to go. I mean, obviously the equity markets, as I say, the indices markets look very positive, but I wouldn't. The risk reward isn't great buying them at current levels, so I would be looking to buy dips in those. The only one really that I would like to buy at current prices is gold. I'm going to get long of gold here, 1864. And I'm going to put the stop at 1854, which is just below the swing low of 4 o'clock. And I'm going to just look for a standard 2-to-1 risk reward, which comes in at this lovely black line, which is a long-term fib, I think. No, it's just a horizontal line. So that's a level of resistance, 1884. Yeah, that's me. 2-to-1 trade, 2-to-1 risk reward ratio, buying at 1864, stopping at 1854, and the target is 1884. I'm going to put that on now.
Lovely. I'm going to take a look at Bitcoin today. This is the hourly chart. As we know, Bitcoin's been on a super run higher in recent weeks. It failed just shy of that 20,000 level back here on the 1st of December, and since then we've seen a reasonable correction. This is the recent swing move. So from the lows here on the 26th of November to those highs there on the 1st of December, if we draw a Fibonacci table on there, then we can see we've got this 61.8% level at 17,619, and it seems to have held on a test over the last hour that level quite precisely. So maybe that's attracting some buys back into the fold there for that next push back up to the 20,000 level. A decent looking sort of hammer-ish kind of candle potentially forming there. I'm going to buy that now with a stop below the lows of this morning at 17,577. Current price 17,955, and I'm going to target a move back up to this swing high here at 19,920. Let's say just to round that off, which would be 5.47R if it were to play out from here. And God, do we need that? So let's pray. Okay, so 2 calls for today. We've got a gold trade and a Bitcoin trade. In terms of numbers due out today and data to keep an eye out for, we've got a Bank of Canada's decision, which is due at 3 p.m. There is expected to be no change in rates. So we'll keep an eye out for the rhetoric and the discussions that come after that. And we've also got US crude inventories at 3:30. Stockpiles fell by 679,000 barrels in the preceding week, so that's a number to keep an eye out for at 3:30 today. More Brexit talks, I think, scheduled for today, so there could be some headlines out from that. Looking at what sterling's doing at the moment, possibly a bit of a positive tone around that, but we've said it so many times before, so let's see what happens. Steve, anything else to add before we wrap it up for the day?
No, I think that's all from me.
Excellent. Okay, let's call it a day then. Ian should be back hopefully tomorrow, providing all goes well with his jump. Good luck, Ian, and we'll see you tomorrow.
Excellent. Cheers, Joe.
Yeah, bye.